Hi there, thank you for viewing this week's video. Let's look at the indices and check out how they performed. Also, the outlook for the upcoming week. Last week, the US market began with some sell-off for the Nasdaq and S&P 500 as the market showed concern of inflation ahead of FOMC. Especially if you look at the Nasdaq, it had gone down to test its major support and was on a verge of breaking down. However, the turning point came as the market cheered on the unexpected PPI data on Tuesday, and the market turned on its bullish engine as the FOMC is over. Even with the Fed higher rate to 0.25, I beg your pardon, basis point, and a more hawkish command, the market takes this as synergy, and the signs of the US market economy is doing better, suggested by the Fed chairman, help all the US indices embark on a 4-day strong rally. The rebound also coincides with the strong recovery of the Hang Seng market or the Hang Seng index, as the Chinese government set to announce business-friendly policy, especially to those listed in the US market. I will discuss this further. First, let's take a look at the chart. We are looking at the Dow right now. Okay, so if you look at the chart over here, this is the beginning of the week over here. The Dow started the week flat as it attempted to rebound higher, failed towards the end of the day, as you can see from this upper shadow. Nevertheless, it is not all bad as the index is still within its consolidation zone, and the candle pattern suggests it is an inverted hammer. And the second day rebound was convincing as it closed higher than the first day high to give confirmation to this inverted hammer. Since then, the market did not look back as the index continued to rally to this resistance at 34186 to form its double bottom formation, and then it break up from there to have a successful sign of change of trend. So it ended the week strongly, very near to this resistance at 35025. And in a bigger picture, we are looking at more potential upside because of this double bottom formation with a projection at this level 36045. Now, of course, to hit this level, the Dow must break out from its immediate resistance at 35025 and this resistance at around 35692, okay, around here. Okay, certainly the index is looking bullish for the time being, especially with this double bottom formation breakout successfully. Now let's move on to S&P 500. It began the week over here with a sell-off below its previous day candle. It closed, and the positive takeaway is that it did not break this low at 4157. So the market made a strong reversal on the second day of trading, forming a one white soldier pattern, and the next following days have seen the index broken above its downtrend lines to hit this resistance 4415 and form a double bottom formation. Okay, so this double bottom formation is crucial for it to change its trend as it break out successfully, or it has broken out successfully from this formation. So from the projections, we can see that there might be a chance for S&P 500 to hit 4735, and it has another 6% to go. Okay, so let's see whether can it do so by continuously rallying to this resistance. Now let's move to the Nasdaq. So Nasdaq on the Monday night was quite worrying because it came down to test this support level, and if it had broken down below this support level, at around 12,590, it would possibly continue lower to hit back 11,260 level. But the second day rebound was a very crucial one. So first, it has broken the descending triangle formation. Second, it formed a one white soldier, and it got a confirmation on the third day of trading in the week, and continually rallied up to retest this resistance around 13,828, and it forms a double bottom formation. The week closed slightly higher, so which means that it has broken out from this formation as well, following S&P 500 and Dow, which had broken out from their double bottom formation. The projection for Nasdaq is another 8% more, or rather the Nasdaq is expected to move higher by another 8% if a change of trend is successful. But of course, it got to break up from its resistance along the way, right? Namely 14,176, and then followed by 14,518. Then we can see the index recapture back its 15,000 level. Moving on to the Asian market, let's start with the STI. The STI has moved up above 3,299. As mentioned last week, this is a very crucial level because it will put the index back into its bullish path, and it has done so. Now, the current candle pattern suggests that the index may consolidate further before it can continue to revisit its resistance at 3,465. But of course, we need more observation because although these two candles suggest uncertainty and suggest potential consolidation, it is also possible for it to immediately break out above 3,348 and then continue its upwards rally. But then if it doesn't do so, of course, holding above 3,299 will be a crucial level for the index, because holding above it can suggest that this index can return back to move to its resistance higher, especially when it rebound from 3,299 and then break out from 3,348. Okay, certainly the chart is suggesting a potential upward movement. It's just the matter of time whether can it break out or not. Now let's look at Hang Seng. Okay, so Hang Seng last week began with the shortest continual bombardment as it crashed down by more than 2,000 points to retest its support at 18,237. This was the 2016 support level, and the market was very fearful. The panic selling during these first 2 days of trading, especially on the tech sector, had never been seen before, because of the fear of the crackdown from the Chinese and US government has led to the investor fleeing the market. However, on this particular day, on this particular white candle day, the Chinese government came out to announce that they are going to have more business friendly policy towards, especially towards those counters that are those companies that are listed in the US. And it helps the market to reclaim back more than 3,000 points. And of course, judging by such a strong movement, where the index has already traded above 21,000, it put itself in a very good position to change its trend. Okay, so some of the scenario that we can imagine next week is that if the index starts to pull back, it will be best that if it can hold above around 20,120 and then rebound from there to retest its high, and that will form an inverse head and shoulder formation. Now, of course, needless to say that if the index did not pull back and continually move up to recapture 23,000 points around here, then it will be a classic V-shaped recovery, and we may see the index retest its 25,050 resistance soon. Okay, so this is a very very important movement to go back to 25,000 points, because throughout the whole year it had been down. As I mentioned last week, it had been down 35% since it peaked in 2021, and by recovering, we can see that the market has returned confident to the Hang Seng market, or the Hang Seng index, and of course going back to the peak in 2021 will be much welcome. Wrapping up, the market is seemingly putting their attention more on the economic growth instead of the war in Europe. However, I think that the war can be still used as an excuse again for selling, especially when the peace talk fails again. The market has given much needed rebound, and all the 3 US indices have had double bottom formation, and this may lead to a change in trend. Historically, no matter how bad the situation seems, the market always has a rally in April. And with April drawing near, let's see whether the rally will take place again. The coming week's GDP data, US GDP data, unemployment rate, and ISM data may help to boost the market further. Let's see whether the global market can close at another high next week. Peace. Thank you for viewing this video, and I'll see you again next week.